Good evening, ladies and gentlemen. Welcome to the garage. I am Avatar John, and you are riding with me on a Thursday night, February 26th, 2026. If you were here last night, we called the engine restart. We showed you the contradictions. We mapped the battlefield. And tonight, the garage is back with fresh intel because the market just threw us a curveball and your timeline is confused. That is exactly when the garage goes to work. Before we get moving, smash the like. Hit the follow and send this to somebody who needs it. Send it to your coworker who keeps hearing about crypto but does not know where to start. Send it to the person in your life who thinks the stock market is the only game in town. Because in this garage, we do not just cover crypto. We cover how the entire financial engine works and we explain it so the first timer and the 10-year veteran both walk out smarter. That is the deal. Now let us get into it. Last night, we told you Nvidia printed the most dominant earnings report in the AI trade. 68.1 billion in revenue, 73% growth. And what happened today? Nvidia opened down nearly 3% and by midday was down 5%. Now, if you are new to markets, that makes no sense, right? The company just crushed it. Best quarter ever. How is the stock going down? Welcome to one of the oldest lessons on Wall Street. Buy the rumors, sell the news. The big money did not wait for the earnings call to buy Nvidia. They bought weeks ago, positioning ahead of the report. When the numbers dropped and confirmed what they already expected, they sold into the excitement. The retail crowd rushes in on the headline while the institutional desks are already heading for the exit. That is how it works. And that 5% drop in the biggest AI stock on the planet sends a tremor through every risk asset, including crypto. Because when the engine that has been pulling the entire train stumbles, everybody in the back cars feels it. Now, while Nvidia was selling off, two other stories hit the wire that matter for where we are going. First, jobless claims came in this morning at 212,000. The estimate was 217,000. The previous reading was 208,000. For anyone new jobless claims, measure how many Americans filed for unemployment benefits for the first time last week. When that number comes in lower than expected, it means the labor market is stronger than people thought. A strong labor market gives the Federal Reserve zero reason to cut interest rates. And when rates stay high, money stays expensive, borrowing costs stay elevated, and risk assets like crypto stay under pressure because the cheap money that fuels speculation is not coming anytime soon. Continuing claims actually ticked down to 1.833 million from 1.864. That confirms the same thing. The job market is holding up, which means the Fed stays on hold. Second, Iran and the United States are resuming nuclear talks. Iran state media confirmed negotiations restart within hours. Now, this might seem like it has nothing to do with your Bitcoin position, but let me connect the dots because this is exactly what the garage does. Iran tensions directly affect oil prices. Oil prices directly affect inflation readings. Inflation readings directly affect Federal Reserve policy, and Fed policy directly affects how much liquidity exists in the financial system, which directly affects how much money flows into risk assets. If these talks go well, oil prices stabilize or drop. That gives the Fed room to eventually ease. That is good for crypto. If the talks collapse, oil prices surge, the Fed gets hawkish, risk assets get crushed. One negotiating table is connected to your portfolio. We watch the whole engine. So that is the world we are sitting in right now. Nvidia selling off on the best quarter in its history because smart money already priced it in. A labor market strong enough to keep the Fed locked in place, and geopolitical negotiations that could swing oil prices in either direction within hours. Now, let me take you under the hood on the crypto side because the contradictions tonight are loud. The headlines in crypto are screaming bullish. MetaMask just partnered with Mastercard. MetaMask is the crypto wallet millions of people use. Mastercard is the card in your back pocket. Those two linking up means spending crypto in the real world just got as easy as tapping at the register. That is not a roadmap promise. That is live infrastructure. Morgan Stanley is about to offer Bitcoin trading on the E-Trade platform. E-Trade, the same app your neighbor uses to buy mutual funds. One of the biggest brokerages in America putting a buy Bitcoin button right next to buy index fund. That is Wall Street building the on-ramp, whether the skeptics like it or not. Tokenized treasuries crossed $10.8 billion. That is real. government bonds living on blockchain rails, trading 24/7 without middlemen. And Indiana just passed House Bill 1042, creating a state-level framework for crypto investment. The regulatory wind is shifting. Those headlines are real. But here is the contradiction that the garage lives for. The Coinbase Premium Index is still negative. Let me explain this because it is one of the most important gauges on the dashboard. Coinbase is where American institutions buy Bitcoin. When the price on Coinbase is higher than offshore exchanges, it means US institutional desks are buying aggressively. When it is lower, they are selling. That premium has been negative for almost a month. That means while your timeline celebrates MetaMask and Morgan Stanley, the actual trading desks in New York and Chicago are selling into every rally. Think of it like a car dealership running a massive advertising campaign. Billboards everywhere, radio spots, social media blitz. Looks like business is booming from the outside. But if you walk into the back office and look at the actual sales ledger, the numbers are flat or declining. The marketing is loud, but the register is quiet. That is what is happening right now. The narrative is bullish. The execution is not. Now, $320 billion in stablecoins are sitting on crypto rails, all-time high. Digital cash loaded and ready. 10 trillion in monthly transfer volume. 80 billion parked on exchanges. That is a full fuel tank, but a full fuel tank means nothing if the car isn't parked. Until those stablecoins actually show up as buy orders on Bitcoin and Ethereum trading pairs, the fuel stays in the tank and the car stays still. And right now, tonight, Bitcoin is sitting at the single most important technical level on the board. $68,000, that is the CTA flip line. CTAs are algorithmic trading funds that follow momentum rules. If Bitcoin closes the week above 68,000, those algorithms automatically flip to buy mode. That is forced buying from machines. But if price drops below 65,000 on a daily close, those same machines flip to sell and the selling accelerates because the options market has dealers in negative gamma right now. Negative gamma means every move gets amplified, up moves get pushed higher, down moves get pushed lower. It is like driving a car where the power steering overreacts. A small turn of the wheel sends you lurching. The corridor is drawn, 65 is the floor, 68 is the line, 75,000 is the options expiry max pain magnet for tomorrow. 7.3 billion in options expire February 27th, and dealer mechanics are pulling price toward that magnet. Now let me talk about what is coming next month, because this is the part that will save you money if you pay attention. March brings the single largest token unlock event of the year. $6 billion in previously locked tokens are about to become sellable. 300% above the normal monthly average. For anyone new, let me break down what an unlock is, because this concept is critical. When a crypto project launches, they lock up a portion of tokens for early investors and team members. Those tokens cannot be sold until a specific date. Think of a car dealership that ordered a massive shipment, but the transport trucks are not allowed to deliver until March 1st. The moment those trucks pull in, the lot goes from tight inventory to overflowing. When supply floods and prices drop because sellers outnumber buyers, but it gets worse. The insiders receiving those unlocked tokens do not wait for delivery day. They hedge early by shorting the token on futures markets. The selling pressure arrives before the new supply does, like the dealership slashing prices a week before the trucks show up because they already know the lot is about to overflow. The biggest unlock is Whitebit token, facing a 200% supply expansion. The circulating supply is about to triple. If you are holding WBT or any of the other major unlock names like APT, WLDSUI, or GRASS going into March, understand that you are parked on a train track and the horn is blowing. So let me bring tonight all the way home. The world is sending mixed signals, and the garage is here to sort them out. Nvidia sold off 5% on the best quarter it has ever had because the smart money was already out the door. The labor market came in strong, which keeps the Fed locked in place, which keeps the liquidity faucet turned off. Iran talks could swing oil in either direction within hours, and oil swings move the entire rate and risk equation. The crypto headlines are bullish, with MetaMask, Mastercard, and Morgan Stanley E-Trade building real world on ramps, but it gets worse. The Coinbase premium is negative, which means institutional desks are selling, not buying. 320 billion in stablecoins sit idle, 7.3 billion in options. Expire tomorrow, with max pain at 75,000 and negative gamma amplifying every move. Bitcoin is sitting right on the 68,000 CTA flip line, and a $6 billion supply cliff is 30 days away. When the narrative and the mechanics disagree, the garage sides with the mechanics every single time. Narratives are stories people tell. Mechanics are math the market enforces. You can argue with a headline. You cannot argue with a liquidation engine. Your watches tonight: ETF flow consistency. Still need multiple consecutive positive days, not one-off bounces. Binance BTC balance. Below 676,000 means accumulation. Above 700,000 means distribution. Stablecoin deployment into spot pairs, and now add oil to that list. Brent crude at 72.49. If it pushes above 75, the Fed gets another reason to pause, which chokes the liquidity that risk assets need. The Iran talks are the swing variable on that one. Nvidia showed us today that even the strongest engine on the track can stumble when everyone is already positioned. The lesson is not that AI is dying. AI capex is still accelerating at 650 billion plus this year. The lesson is that markets do not reward you for being right. They reward you for being early. The smart money bought Nvidia weeks ago and sold today into your excitement. Do not be the person buying someone else's exit. In the garage, we do not guess, we do not hope, we do not chase, we diagnose, we verify, and then we move. Bitcoin is the only asset right now with enough structural support from ETF bids, whale accumulation floors, and options gravity to weather what is coming. Everything else is noise until the stablecoins deploy. Share this with someone who needs it, the person confused about why Nvidia is down after great earnings, the person who does not understand how Iran talks affect their portfolio, the person who has never heard of a token unlock. Send them to the garage, because understanding how the engine works is the alpha that never expires, and the door is always open. Engine's hot, safety off, let it rip.